Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1245A, and today's date is April 3rd, 2017, and the title of the episode is, The Herd is Convinced That There Are No Bubbles, which means the bubble is ready to pop. Let's get into the economic collapse financial news. Now, today we can see the market is down once again. It was down on Friday, and we're seeing that the market is having a little bit of trouble trying to get up and running once again. And we're seeing that the insiders right now, well, they're looking at the situation and they are starting to dump stocks. But let's first talk about automobiles. Now, we talked about automobiles and how GM, Ford, Fiat Chrysler, and many of the other automobile manufacturers, they've been using incentives to try to boost sales. Well, we're getting the sales numbers and they're coming in, and they don't look too good. We see Nissan missed their sales forecast for the month. Now, you need to remember something very, very important here. They were using incentives to increase sales. Incentives like we've never seen since the Great Recession prior to it in 2008. And what we're seeing right now is that many of these manufacturers, well, it hasn't worked. I mean, GM sales, they were up 1.6% year on year. They were expecting an increase of 7% with their incentives. Ford sales dropped by negative 7.2%. Fiat Chrysler declined by negative 5%. And remember, GM, they offered the highest incentives for people to come in and purchase their automobiles. And remember, by doing this, guess what happened back in 2008? Yeah, they went into debt. The same thing is happening right now. And is the automobile industry going to bounce back once again? No, it isn't. I mean, look at the other automobile manufacturers. Toyota down negative 2.1%. Honda down negative 0.7%. Hyundai down negative 6.3%. It looks absolutely awful. And when we look at this whole entire situation, it is just getting worse and worse as time goes on. We see that 46% of millennials in San Francisco, well, they're ready to move out. Why? Blaming housing and traffic. Well, they can probably blame Trump, but again, he's only been president for a couple of months here. So this is all because of what has been happening in the economy. San Francisco, very expensive. The rent is very, very high. And there's a lot of individuals in there because of a lot of people flocking to this area. But what we're seeing right now is prices are starting to come down. And individuals are looking at the situation saying, we better get out. And according to a new poll conducted by the Bay Area Council, 40% of all people living in San Francisco say they're ready to ditch the city for greener pastures. And the number is even higher among millennials at 46%. So what we're seeing right now is they're worried about the economy. It's time to ditch these high-priced condos, homes, and to get out right now. We see Obama's economy, which this is really what it is right now that we're in. Well, it is the worst economy since post-World War II. The Federal Reserve lowered interest rates to 0%, making bonds and interest-bearing accounts untenable for retirees, effectively forcing people into stocks, hence the stock market being so high. The Fed's balance sheet went from $750 billion to $4.5 trillion over that time frame, rigging both equity, currency, and bond markets over Obama's entire 8-year term. Due to the financial crisis, drastic measures were taken to transfer the risk from the banks onto the national balance sheet. The Obama administration underwent a methodical process of deficit spending that kept the economy artificially afloat. The side effect of this reckless spending was an additional $9 trillion in debt added to the America's balance sheet. The net result? Well, extreme failure. Because if we just judge this on return on investment, as a nation, we stimulated the economy with more than $13 trillion in debt and Federal Reserve market interference, and yet the Obama years will forever be remembered as the only administration since Hoover not to grow the economy by more than 3% during his entire 8-year term. Now, keep that in the back of your brain right now as we move forward here, because what we're seeing is that the economy is ruined for many Americans. 67% of low-income Americans, they are worried today about what? What do you think they're worried about? They're worried about hunger and homelessness. Now, those individuals who are making $30,000 or less, they're worried about affording a meal every single day. And a lot of people think, well, $30,000, why would they be, worrying about getting food? Well, if it's a family of four, $30,000 doesn't really go that far, because if you take away taxes, take away other expenses like car, insurance, and everything else, you're really left with a little bit of money here. And we can see right now that they're very worried about the economy. They're very worried about inflation, because think about this for a second. We know that wages and salaries have been declining. We know that inflation on food has gone up. And what happens here is that the buying power of those dollars continually decreases, making it harder and harder. We know that insurance has gone up. We know that, and I'm talking about auto, we're talking about health insurance, we're talking about all of that has continually gone up. And a lot of people haven't even gotten the cost of living raises. So the situation is very, very dire for many of these individuals. And as we move forward, it is just going to get worse. And how do we know it's going to get worse? Well, we've been blowing up bubbles for the last 8 to 9 years right now. Not we, but the central bank, the U.S. government. They've been blowing bubbles up to keep the economy operational. Not for the everyday person, but for themselves, for the central banks. And we are now seeing a housing bubble, an automobile bubble. We're seeing a derivatives bubble, a treasury bond bubble, a student loan bubble, and a stock market bubble. Let me read to you the definition of a stock market bubble. A stock market bubble is a type of economic bubble taking place in stock markets when market participants drive stock prices above their value in relation to some system of stock valuation. Behavioral finance theory attributes stock market bubbles to cognitive biases that lead to groupthink and herd behavior. So what we're seeing right now is that the insiders, the central bank, who've been pumping this market up, they've been pumping it up, making everyone think over the 8-9 years that this is going to last forever and it's going to be incredible. And what's happening right now is that insider selling, it just hit a 6-year high as retail investors are rushing into stocks. When you see this happen, this is a classic bubble signal to let you know things are going to rapidly fall apart very, very quickly. When you see this in the housing market, it's the same exact thing, where you see all those builders and all those insiders who are building and buying all these different homes and stuff. When they start to sell and retail, the mom and pop come in and they purchase these homes, or they think it's a great time to flip, it's a great time to get in because look, we waited it out and we see that the home prices are continually rising and they're starting to get in. We saw this back in 2007 going to 2008. At the end, when people thought, wow, this is going to last forever, let me buy that one more house. And now they have 3 to 4 homes that they're renting out. And they thought, wow, this is going to increase and things are just going to get better and better, without any knowledge or anything showing them that things are rapidly deteriorating. Because when you look at the corporate media, what are they telling you? That everything is fine and everything is getting better. And when you continually follow that type of logic, well, that's when you get burned in the end. Because when you look at what is really going on, you can see that things are deteriorating very, very quickly. You can see the insiders getting out. You can see all those investment companies, hedge funds, who are now trying to get rid of their homes. You start to paint a picture of what is really going on. And what is really going on right now is that the housing market is coming down. The stock market is coming down. The student loan market is going to be in a big trouble. The derivatives market is going to come down. The bond market is going to come down. We're going to have a disaster scenario on our hands as we move forward into this year. And it's going to get worse. We said, and according to Cliff High, we were going to see chaos in March. We are seeing chaos right now. And it's just going to get worse as we move throughout this year. It's not going to get better. The Fed has already signaled it's time to bring the economy down. This is why they raised interest rates in 2016 in December. They did it right in the beginning of 2017, and they're going to raise it again. We already see China. We already see Russia. They've been ramping up gold. Why? Why would they need so much gold? Because they understand eventually they're going to have to decouple from the dollar. They're already making plans to decouple from the dollar. They're already trading without the dollar. And they're planning on gold-backed trading. And we can see that this is all in preparation for what is about to happen, where the dollar plummets, it crashes, and the economy is a complete disaster. So everyone at this point, you need to get prepared for what is coming. I know for many of you, it's very, very tight. It's very difficult to go out and say, you know something, I just have an extra $200-300 to go buy precious metals. Or I have this extra money maybe to buy Bitcoin. I personally like precious metals because I like holding the physical. I know you can have a paper wallet in Bitcoin and hold it, but again, if there is some type of cyber war or cyber attack, I'm very nervous about the internet. I'm very worried about what would happen to Bitcoin. I'm very worried about that entire scenario. But if I have the silver, if I have the gold in my hands, I know it's safe. I don't sell silver. I don't sell gold. I have nothing to do with Bitcoin. I have nothing to do with any of these things. This is my own personal opinion. Now, for those individuals who can't go out there and purchase gold, buy silver. You don't have to buy an ounce. You can buy a half an ounce. You can buy a quarter of an ounce. You can buy a tenth of an ounce. You have options, but continually just purchase a little bit at a time. You don't have to go in and say, listen, I'm going to buy 1,000 coins right now. You don't have to do that. You don't even have to buy bars. And I've been talking to people for a very long time. We've had plenty of time to prepare. If you're waiting to the end right now going, okay, I see things are starting to fall apart. I see things are ramping up. And by the time that things start to fall apart and all of a sudden the stock market starts to drop and gold and silver start to move up very, very quickly and Bitcoin starts to move up very, very quickly, it's too late. You'll never get in. You'll never be able to purchase what you think you're going to purchase. You're never going to be able to run to the supermarket and get that food. It's just going to be too late. So get prepared. Get ready for what is coming. Because we can see right now from all the evidence, from all the indicators that we've been looking at, the economy is prepared and ready. The central bank, they're getting ready to bring the entire thing crashing down. And of course, they'll be blaming this on either Trump or another country because they're not going to take the blame for what is about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.